CNBC-TV18, embarking on a quarter century of excellence.
Hang Seng is up around 2%. We have the Taiwanese index, which is up around 0.9%.
We decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Nifty needs to take out, as I said, the recent high of 21,037.
First take on the index, it's a blowout performance right at the opening. The Nifty is up 160 points.
We were worried about oil going to triple digit thanks to geopolitical tension. God plays his role, and tathastu, oil is down to 75.
And if you see our growth over the past 2 years, we've grown at approximately 27% CAGR.
My sense, it's a 5 to 10 year kind of run, and grand finale is ahead in the stock market. So we're in bull market.
So hopes of a rate cut, even back home in India, have boosted the spirits of real estate companies.
Right, we are still pretty positive on the way the investment cycle is unfolding in India.
It's so positive that it has pulled up in spite of a very negative fuel inflation.
Both these drugs now comprise of 52% of Novo Nordisk sales.
It talks about increasing the surrender value.
It's a stellar rally that is underway. It is fueled by global macro cues that have come by.
$21,200 on the Nifty and a near 1,000-point rally on the sensex. That's the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me, Sonia and Nigel. Terrific, right? This has been absolutely blowout. We started off with a gap up opening. The Nifty was up, 180, 190 points to start trade. And on top of that, we've added on about 80-odd points.
Well, it's a terrific Thursday. I think this morning we had termed it as that, right? We're bracing for a terrific Thursday, and that's precisely the way it's played out. And if you look at the chart all day, you bought at any point of time, you would be making money. So it's a trend day, so to call it, on the Nifty itself. And, you have weekly expiry today. Positioning was such that maybe we don't see a 200-point rally. They've got that. So the call shots are covering up because that contract expires in the next 1 hour or so. And small caps, the party continues to remain out there because you'll say, well, the Nifty is up 1.3%. The mid-cap index is not performing that much. The small cap index, that in fact is doing quite well, 1% higher. And you'll also have plenty of stocks that are leading the way out there. So good to see both the pillars of the market doing well and the breadth of the market pretty good.
And the party is continuing in the global markets. So Europe, if you pull up the early rates, the DAX and the FTSE are up 1 to 1.5%. The US 10-year yield, when you all started the show at 8 o'clock, Bazaar, it was just below 4%, 3.97. I think it had gone down. It's fallen even further, 3.94%. And as Nigel pointed out, the two big pillars of the market, IT and banks, are both outperforming. The IT index is a rally of 3.5%. The banking index is up 1.5%. And the top 4 Nifty gainers today are IT names. The only segment lagging is FMCG. Cuts are not deep, but at least it's in the red.
Absolutely. They say generally when you come to work, some days are there when you really don't feel like working or, markets are very quiet. But today was a day when you just wanted to track every second of the market because of how much energy this market has seen, right? And I think the best part about today is after that initial gap up, not once did we see any sell-off. Not once did we see any volatility. We just continued to build onto our gains. So I think that was the best part. Just a couple of more cues. I think what's happening in this market now is that this is a big macro trigger. So not just the 3 rate cut projections from the Fed, but also the fact that there is no recession coming, right? That's what Fed Powell suggested. That's a powerful trigger from the market, and that could perhaps lead to a further up move in the next couple of days. So it looks like we're not done with the rally just yet. There is leadership both from banks and technology stocks, as we've been saying. So both are firing today. But one good thing that I really liked in the last couple of days is that large caps have started to perform. Yes. Today, ICICI Bank is at a fresh 52-week high. IndusInd Bank is at a fresh 52-week high. Rate sensitives are shining. So DLF is at a fresh 52-week high from real estate. So, finally, we were talking about this, Nigel, a couple of weeks ago, how mid-caps are just firing, but large caps are so dull, and how things have changed.
Well, that's right. As Nimesh put it, Hrithik is dancing now.
Yeah. I don't know how that's going to look.
Nimesh may do a step when he comes to Deep Street Chatter. We'll have to ask him. But, the large cap names are performing, and maybe 2024 will be a year when, in fact, we see the large caps coming back into play because valuation support is there out there. But let's go across to our technical expert. Mitesh joins us on the show to help us out with what do you do from here on. Hi, Mitesh. Good afternoon. Thanks so much for joining in. Well, Mitesh, this morning we were saying there's going to be a 200-point gap up. At no point of the day you even got, I think, a 50-60 point dip. The market just continued to trend higher. What do you do from here? Where do you put your trail your stop loss from here on?
Good afternoon, Nigel. Two things. One, I think, before this gap up we got, for 3-4 days, he was sideways and consolidating. The highs were around 21,000. So that becomes an important pivot. Two, we had a gap up which, went past this 21,000. So I think, that gap support also confirms that 21,000 should be the immediate support pivot. So keep a stop just about 10-15 points below that. And I've been maintaining that 21,450, 550 is the first target area, but logical extension suggests that 22,000 or near about levels could be tested. So we'll maintain a positive bias. Similarly, on the bank nifty, I think, the bank nifty, I've talked about targets in excess of 48,000 and then eventually heading towards 48,400, the 500 zone. So again, maintain a positive bias. On the stock side, Wipro is something, and IT names are buzzing today. Wipro is something which I would recommend buying with a stop at 424. Look for targets of 450. And ACC is the other one which I like. That's showing good continuation. So ACC is a buy. Keep a stop just below levels of 2200. Look for 2325 as the target area.
Okay, those are some individual ideas. Well, IT is clearly the leadership sector of the day. The Nifty IT index, pull that up for you. It's up 3.4%. It started trade with a gap up. The gain was about 2.5%, but it's built on that and now up 3.4%. That said, even as the index has surged to a new 52-week high, it's still a good 12 to 13% away from its all-time high level. The all-time high level on the Nifty was 39,447, hit in January of 2022. Just before the rate hiking cycle in the United States began. It was post that Fed pivot where, Jerome Powell had spoken about the rate hiking cycle in December. And after that, you saw the, correction in IT stocks set in. And many stocks are quite a distance away from their all-time high levels. The Wipro stock is about 40% away. Tech Mahindra is about, 30% odd away from its all-time high levels. TCS is 9% away. Infosys, which has had multiple guidance cuts through the course of this year, is about 23% away. There are 3 IT stocks which are at a fresh all-time high levels in the mid to large cap space. One is HCL Tech, the other one is Coforge, and the third one is Persistent. Now, what's driving gains? If you remember, the outlook for IT companies was clouded because clients were refusing to spend. They were very unsure about the macro environment. Is there a recession coming? And therefore, they had stopped spending on discretionary projects. They had also taken very long to decide on projects. So the decision-making cycle was getting extended. There was a lot of scrutiny on, existing projects, new projects. But now, if indeed there is some clarity, some certainty on the US macroeconomy, then maybe the clients of tech companies will be in a position to start opening up their wallets and spending. And if that comes through, then maybe we will see a demand revival for IT companies. So that's what's driving it. Broadly, the rupee level today, even after the appreciation we've seen intraday, is still lower than what it was when you compare it to the Q2 average. So some margin benefit could come on account of that. And purely on valuations, IT stocks do well when we see, the yields at least in the US 10-year yields come down. There is a sentiment impact on IT names. But I think the big fundamental trigger is that can we actually have a bit of a demand revival due to the macroeconomic certainty? Devin Choksi, MD of DR Choksi FinServ, with us on the show. Devin, IT stocks have gone through a rough time. Wipro's 40% away from its all-time high levels, Techem 30% away. While we may not be at the bottom of the demand cycle right now, we may be close to it. Maybe in the next 3 months, 6 months, demand bottoms out for IT. Is it time to start looking at technology? And if yes, which one is best positioned in your assessment?
Good afternoon, Rima. Well, obviously, I think when you look at calendar year 24, few of the possibilities that one can probably find. Most of the majority of the Fortune 500 companies included, I think they will probably go for the cloud computing space where the demand for the transition would be extremely high. Second most important aspect, I think, which is picking up the trend very quickly is about adoption of AI and AGI. I think these two technology blocks, I think, would probably, result into higher amount of efficiency as well as the demand generation into respective businesses. And that is where, again, I think the demand for IT services is going to be high. What we observe is that many of the companies who have refrained from putting orders to the vendors in the last year, they are expected to, I think, not only put in order for 24, but at the same time, I think, cover up for the spending that they have not done in previous year. So more likelihood of, I think, receiving the larger contracts, and that too for a longer tenure, is going to be on a higher side. Given that possibility, we believe that many of the frontline IT companies would probably see the visibility of billion-dollar contracts on a quarterly basis, I think, at a very high level. And at the same time, mid-tier IT companies which are in a specialized field of engineering and R&D, I would think that those companies would continue to get the niche business coming from the specialized sector that they are serving. So all in all put together, do believe that I think for the market as a whole, I think there is a tailwind also available, because I think higher amount of index funds getting allocated to the emerging markets, and possibility of that would remain high. So obviously, I think these index funds would chase some of the larger companies which are not performed in the previous year to add them into the portfolio to get the alpha return out of it. So these all equations are working for, I think, some of the sectors, including IT, and soon it could be metals as well.
Okay, all right. Deven, since you mentioned metals, I wanted to ask you about Vedanta. You know, whenever the promoter entity, there's Mr. Anil Agarwal, is in trouble, over the last 10, 13 years I've seen, if he's in trouble, I always bet on Mr. Agarwal coming up with the goods. Because either he'll sell some stake, he'll sell some asset, or, you know, but he'll come up with the money and the default doesn't come about, irrespective of the fears. Now the stock has moved from 210 to 255 odd, and they've indicated they've refinanced the near-term payment of around $1.25 billion. Is it enough to keep you enthused? Because there's a tailwind for the metal space, and now the promoter entity issue, at least for the next few months, is behind. Your view at 255?
Yeah, Nigel, I think very clearly said, the group is transiting, I think, from a structure which they have up till now built in, now to a demerged structure. Now, what does it mean? That in initial phase, till the time the demerge gets completed, the higher amount of growth program would probably will have to wait. At the same time, the amount of dividend which is getting distributed from Hindustan Zinc and VDL, all of this, I think, is resulting into the parent company's fold. So obviously, the free cash flow is getting consumed towards payment of debt. And as we talk, I think the debt component, I think, remains significantly higher at the group level. So this restructuring part has to pay for, I think, the entire repayment that they have to do for the debt. And at the same time, I think the growth program will probably take a hit by a couple of years. Though I agree that the valuation-wise, everything is factored into the price at current level, and somebody may want to take a contra bet. But that's a cost, I think, that one will pay. The growth will have to wait for some time. And I think the repayment of debt at the group level will be the reality. I would still prefer to stay with, I think, the more visible companies like Tata Steel, like Hindalco, at this point of time in the portfolio in the commodity space.
Fair enough. So Tata Steel, Hindalco are stocks that you like. Got it. Don't miss the move that we're seeing on real estate right now. It's a bumper move. DLF, Godrej Properties, any real estate stock you pick. Oberoi Realty is up almost 4% as well. So shining through over there. But all of this began when the Fed decided to announce that they won't be moving on rates this time, but they may do 3 rate cuts in 2024. And of course, they also spoke about the possibility of no recession in the US. So growth has been strong. Taimur Beg, Managing Director and Chief Economist at DBS, joins us now, DBS Group Research. Taimur, thanks a lot for joining in. It's been a bonanza month and bonanza year, right, for the bulls at least. How are you feeling about this whole situation where both global and Indian central bankers could be heading towards a easing of the monetary policy? And what do risk assets look like to you? I mean, does it look like we're going to build on to our gains in the year to come?
Well, it seems to me that cycles just get shorter and shorter. 8 weeks ago, we were nervous about how high rates will go. And today we are looking at global long-term interest rates down by about 100 basis points. These sort of delta, I mean, just don't happen in the markets. Never used to happen in the past. But in the last 3-4 years, between the whiplash of QE and QT, we're seeing these sort of volatility over and over again. Today is a day for exuberance, and we have been in this exuberant phase for a while. It may last through the end of the year, but let's keep in mind the cycles are short. So 2 months, 3 months from now, when we have this conversation again, the tone might be very different. That, to me, is the biggest takeaway from the recent developments of the global financial markets. The Fed fell behind the curve on inflation, spooked the markets, at least in 2022, with sizable rate hikes. Early 23, the markets were ready to start pricing in a recession and rate cuts. That all proved to be spectacularly wrong. And now in the last 2 months, again, the views have crystallized around a prolonged rate cut cycle through 2024, 2025, and beyond. And that, of course, if it comes true, would be an unambiguous positive for both developed and emerging markets.
Timer afternoon. You know, on 1st of December, Powell had said Fed cut speculation is premature and the central bank is prepared to tighten further if necessary come 13th of December, and we've got a complete U-turn there. So you said, right, markets were proved spectacularly wrong in 2023. What's your view on 2024? Do you think we will get the 3 rate cuts that Fed is projecting right now and a soft landing, or do you differ on that?
No, I think that room has been set for 75 to 100 basis points in rate cut in 2024. Whether it happens in the first quarter of next year, which seems to be the market's view with almost near 100 probability as the way pricing is right now, or it happens the second half of 2024, might be the only debate we have. The Fed's messaging is a bit schizophrenic. Chair Powell, as you correctly alluded to, 12 days ago had a very different sort of messaging than he has today. When you read the Fed statement, when you read the FOMC guidance from the dot plots, and then you see what Powell said in his press conference, are actually very different messages. The statement is rather neutral. In fact, he doesn't even take rate hikes off the table. Then you have the dot plots, which seem to suggest 75 basis points in rate cut next year. And then there is Chair Powell's press conference where he seemed to think that rate cut can be had because the high levels of real interest rate is a bit too high for his comfort, and it should be brought down as inflation comes down. So very different messaging coming from 3 different parts of Fed communication on the same day. My view is that the market is going to take this in face value from the Fed's mouth, that is Chair Powell's statement, as opposed to what this.
Hi, Taimur. Good afternoon. Nigel on this side. It seems that the bulls, at least here on Dalal Street and the Indian equity markets, they were getting fed up of the Fed. Now it appears that at least that's a little bit behind us. We have to look forward to the RBI. What kind of action are you penciling in with regard to the RBI for 2024 itself? I think they've hiked rates by 250, 300 basis points approximately. What's the trajectory out there, Taimur?
Well, it seems to me that the Indian market has enough domestic markers as opposed to constraints or tailwinds coming from the outside. Equity market may need some Fed-related messaging because that creates the avenue for easier fundraising for various Indian companies. But as far as the RBI is concerned, imported inflation has not been the issue. It's the domestic sources of inflation, whether it is coming from food or from broader range of domestically produced goods and services. That's the question. So do we look at global markers as a permission for the RBI to sound dovish? Not quite sure about that yet, because I think the domestic developments with very strong growth and some climate change related food inflation keeps some degree of headache for the RBI. It'll be too much of a good thing, if you will. We're not talking about the Fed type narrative of whether there's a recession or around that, whether there'll be some stickiness of inflation. We're talking about whether growth is going to be stronger than expected. Would weather-related issues lead to food price inflation on the higher side? So I don't think overnight developments necessarily open an avenue for the RBI to sound dovish. They have to keep an eye on the domestic markers.
Absolutely, bang on. You hit the nail on the head, Taimur, because, Morgan Stanley actually put out a report where they said that this is India's 401k moment, right? Referring to how there is suddenly a surge in financialization of household savings, something that we haven't seen for a long time. And that perhaps is the reason why domestic inflows are picking up also in a big way. So thanks a lot for joining in and putting all of that into perspective for us. We appreciate your time and thoughts here on the channel. Well, for now, looking exceptionally good. There hasn't been any give up on the gains or let up on the gains just yet. We'll take a quick break. On the other side, we have an exclusive conversation lined up with Prashant Khemka. He's the founder of White Oak Capital Management. That comes up in just a bit.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Fusion Microfinance is another stock which is up 6% in trade. There was a large block of 9.25% equity valued at about 500 crore rupees, where we've learned from our sources that Warburg has sold part of its stake. It's not a clean out trade by Warburg. I believe they still hold some stake, but the stock is up in trade despite that block taking place. Devin, any thoughts on Fusion Microfinance? The stock has done pretty okay, 64% year to date. Its fundamentals or financials look quite strong. They've been adding a fair number of customers. How does Fusion Microfinance look to you?
So largely, I think our capital allocation has been in the corporate bank and I think some of the large NBFCs. We have probably, I think, not considered microfinance as our major allocation. So refrain from putting any thoughts on this subject.
Okay. Any thoughts on how to approach some of these large names in the renewable energy space now, Devin? Do you think there is still more traction there? Not just the renewable energy guys, but also the financiers. I mean, not only IRIDA, but there are so many other names in this space as well, right? PFC, REC, etc. in the power space too. From this entire basket, what do you still like?
So fortunately, Sonia, I think all these companies are now probably having a clean balance sheet, which is a fundamentally important aspect. Prior to this, I think this particular sector had the sigma attached. I think the companies were having the recovery issues. I guess I think that part is now gone through. As a result of which, these companies had to get re-rated, which in last 3, 5, 6 months, I think we have seen the re-rating, including IRIDA, which got listed recently. The instantaneous acceptance in the market took place largely because of their B2B and B2C model, wherein I think they've been starting funding even the homes and offices for putting across the solar panel and the power plants. So to a greater extent, I think this company has a good amount of traction going forward because of the larger focus. At the same time, the globe is allocating more money towards renewable, which could possibly mean that I think companies like IRIDA would find more traction because of the larger amount of appetite happening on the buying of the money as well as I think by the lenders. But to a greater extent, I think we are remaining convinced about the prospects going forward. In the near term, most of these companies have possibly achieved, I think, 2.5 times, 3 times price to book value valuation. So to a greater extent, I think the recent rally in the markets is largely driven by the liquidity as I see it. Maybe market corrections will be a good opportunity to buy at slightly better valuations than what it is currently.
Okay, well, let's move on then onto a CNBC-TV18 exclusive. Let's actually thank Devin for joining in. We have about half an hour left for the markets to close for the day. It looks like it's going to be a really strong close. No letting up of gains. But here's an exclusive for you. Parikshit is joining in and he's picking up some news on Ather Energy. Parikshit, what do you have?
Well, one of India's first electric vehicle startups, Ather Energy, which was founded in 2013, is also gearing up for an IPO and is targeting Diwali in 2024 or early 2025. Sources tell CNBC-TV18 that Ather has started seeking inputs on the IPO plan and possible valuations. We also hear that Ather is likely to complete the process of appointing bankers before March next year and independent directors to also be appointed very soon. The company's plans for a listing had been delayed because of the reduction in FAME subsidies, but the company, we believe, is now fully geared up towards an IPO. Sources say the company is not looking to wait for profitability, but will target a revenue run rate of around 3,500 to 4,000 crores before going for an IPO next year. For the moment, Ather Energy is ramping up retail operations with the launch of a high-performance Apex variant of the 450X family and a new family scooter itself, which will be a whole new platform by May 2024. Ather does expect the family scooter to significantly boost sales ahead of the IPO. The company is also targeting the launch of at least 15 to 20 new stores per month and approximately 450 by end of 2024. Just for context, Ather is backed by Hero MotoCorp, which has a 37% market share, 37% stake in Ather Energy. Ola, TVS, Bajaj and Ather are among the top 4 electric two-wheeler makers in the country, and Ather sold over 1 lakh vehicles in 2023 and has an 11 to 12% market share.
Okay, thank you very much for those exclusive details. The party on Dalal Street continues with the sensex nifty hitting a record high after Fed's outcome. We've been chatting with a whole host of guests since morning, And Prashant caught up with Prashant Khemka, founder of White Oak Capital Management, on the markets. And he started off by asking him about what is the way forward, for the current bull run. Listen to what he had to say.
It's a sort of a perfect storm in the positive sense. Domestically, one of the major concerns, not a big worry, but still something that people have been reluctant about, global investors in particular, is the central elections coming up in 6 months' time. So the results of the state elections a week or so ago were in a way a boost to confidence in terms of expectations of continuity of policies and the macro backdrop. The economic numbers that have come out have been fairly solid for India. We all know the economic growth numbers, and the RBI has increased the expectations and so on. But one of the concerns has been over the last several quarters, a couple of years, has been this rising interest rates environment globally, and the inflation, which had been sticky, and with the news overnight from the US and the positive commentary and the new dot plot and the projections therein, it's not something that is a big positive surprise. The markets had been anticipating this and assigning a big probability to something like this, but finally it's a reaffirmation that what the markets were projecting, that's the way forward, very likely for the Fed from here. So that adds to the positive environment for global equities, and having a good backdrop for global equities is always positive for Indian equities as well. Indian equity backdrop had been positive all along, and this further adds to that.
Prashant, one of the things, let me play the devil's advocate, which many were saying was that in 2024, US perhaps will look a little wobbly, growth, etc., cannot stay that strong, and it'll hit a soft patch. So equities there will be not doing all that great. So when US equities do well, we can do better. But if US equities don't do very well, or actually they are down, can Indian equities outperform in an environment like that? I don't even know if that is the way it'll pan out in 24 with regards to the US, and then the reaction function here. But just your thoughts briefly.
Yeah, so first of all, I think, and as you would agree, the premise that because the economy is not expected to do well in 24 in the US would mean that the equities would also not do well is a false premise to start with. I think there is hardly any empirical evidence historically to suggest such correlation. And if you look at most recently the COVID pandemic timeframe, economies worldwide did terribly, but the markets did very well in 2020, 21, right? Because market is a forward-looking mechanism. The slowdown in the economy got probably reflected in last year's return. This year itself, US is up, S&P is up more than 20%, NASDAQ is up more than 40%. Yes, last year, which is 22, was difficult, and markets do look well ahead in advance, and any softness that the market might have been worried about got fairly well discounted a year ago, I would say. So I think market, how they that doesn't mean I'm not suggesting markets would perform really well next year, because the economy is expected to not be down so much or going up. But these are bottom line is the economic outlook for next year, in our view, has very little to do with how the equity market would perform next year. It's more the change in longer term expectations about the trajectory of the economy that would matter more.
No, absolutely. Point well taken. What matters more for equities is, of course, corporate profits and their share of GDP, etc. Just so what does it mean for markets here, for viewers who are watching you, Prashant? What would you tell them? It's a massive boom we are in the midst of. Sort of hold on to everything you have. Add perhaps where. I mean, what's the advice?
So I think on this front, Prashant, I've been very consistent all throughout over the past several decades. Never try to time the market. Never a far better time than any other time, and never a worse time than any other time. Stay invested all along. And this time is no different. I would say the macro backdrop is very positive, but doesn't mean that macro backdrop is positive would necessarily translate into supernormal returns. By the same token, if macro backdrop is negative, does not translate into necessarily poor returns. And I just gave the example of pandemic year, right? So it is, even if it ends up being an average year for equities going forward, given where we are, that's low double-digit returns in line with what nominal GDP growth rate over time has delivered. Low double-digit return is a very good return, from any asset class. And so my suggestion would be to stay fully invested at this time.
And if you have investable surplus, as I'm assuming you get inflows and all fund management, I mean, inflows are pretty strong. Where are you putting that to work, Prashant, incrementally?
Really, no, the appetite for Indian market is fairly robust amongst global investors. In fact, I would say at this time, even more so than domestic investors. So the inflows that the team are getting, they are deploying across sectors, though I would say there are certain sectors that the team tends to find more attractive opportunities. They tend to be private sector financials, as well as consumer, more broadly consumer discretionary, as well as consumer staples, but also industrials, as well as healthcare, some very good opportunities in healthcare and IT services. So more broadly, these are the segments where the team finds a lot of opportunities. Where it tends to find less to invest in are sectors like energy and utilities or telecom, but otherwise a wide range of opportunities across sectors.
I want to get your thoughts on two sectors. One is IT services. With the rate starting to drop in the US sometime, we don't know, will be May or June, but at some point it'll start. What does that mean for IT services here back home?
Yeah, no, I think, IT services went through a bit of a roller coaster ride over the last 3 years. Pandemic, then nosedived for initially, thinking that global demand environment would collapse. And then very soon, everything was going digital and everything was online. So huge surge in IT demand as well as for stock prices as corporate earnings, IT corporates did extremely well. And then with the fears of US recession, 22 was a very, very challenging year for IT services sector, particularly in India when everything else did very well. On relative terms, IT did very poorly and mid caps did even more so poorly. Sector, because that's usually how it is. If a sector does well, the mid and small cap do even better, and vice versa. And this year, if you see, mid cap IT has done very well, despite, and that's important to note, because in 22 all throughout and at the beginning of 23, the concerns were that US is going to slow down, recession is upon us, and so. But year to date, there's so many of these mid cap IT names which are up 50 to 100% or more. What the mid-cap IT index is. Large-cap IT hasn't done that well. It's up like low double digits or so, but mid-cap IT has done extremely well, particularly the ones that are executing or out-executing the peers. And so market, again, here, even at sectoral level, is forward-looking. It is looking beyond the current soft patch in IT demand and possibly a soft patch in 2024. But if this is the worst case scenario through the recession, I think that's a very positive scenario for many of these IT names. We, as I said, continue to find some very attractive opportunities in particularly in mid-cap IT, where you have just dozens of names from which you can choose. And it's an execution game and end of the day. It's an ocean out there of opportunities. India is still some double-digit percentage of global services, and from that, if you can find some strong execution machines, they can compound over a very long period of time.
But that's interesting. You're saying not large cap IT, but mid cap IT as a broad kind of idea, right? Because large cap IT is still not done as much as you said. Mid cap IT has done phenomenally well through the course of the year. Multiples generally are between 30 and 40 times earnings.
Yeah, I would say, large cap IT also. There are. From here, you'll make good returns. It's just from stock picking perspective.
Sure.
The pricing and inefficiency is to a greater degree in mid-cap IT. If you can, in mid-cap IT, identify an out-executing, a superior executing machine, that can give you outlandish returns over the next 5 years.
Got it. PSUs as a space, I know it's not a homogeneous group, but you know, it's a space which is booming. I mean, really been the leader of this bull market, and many believe it will be so in the coming years as well. What's your view, and what do you like here in this space?
Certainly, you know, PSUs have done extraordinarily well over the last years since the COVID bottom in March 2020. It's coming up to 4 years now. PSUs have done very well. We generally have not invested as much in PSUs as I must admit we should have, given how 3 years, especially over the last 3 years, we found opportunities elsewhere. But having said that, over the last 2 years, couple of years, the team has found opportunities in PSU industrials. So when I say industrials, they can be, you know, defense-related companies or otherwise capital goods PSU companies, as well as select opportunities in financials, PSU financials. So these two are the broad areas where the team has invested over the last couple of years. Haven't found many opportunities in, let's say, the energy space or the utility space, just as I was saying earlier. There we haven't invested in PSU, but in more capital goods and financials, we have invested.
Okay, just last briefly, you know, we're at what, 21,000, almost, yeah, 21,200 on the Nifty. It's not the end of the year, but we're almost there. 1 year out, any numbers in mind? This is crystal gazing, but anything?
I think sensex is more interesting one to say. Not that just because it's a good figure, I would say Diamond Jubilee for sensex is on the horizon in the next year with 75,000. We are already in the high 60s, so we're not talking about a big stretch. It's about 12% or so thereabouts return, if I'm right on where 10 to 12% return. So that will be a good milestone to put behind us.
Okay, all right. Diamond Jubilee for the Sensex is what we could look forward to. It's an interesting chat there from Mr. Khemka himself. But it's that time of the day. It's 3:10 now. So let's get in Nimesh. He joins us to tell us what is he picking up in terms of D Street chatter. Nimesh, the screen is looking very, very good. Will the flows look as good?
Well, it looks like the flows will look as good as that, you know, and that's the general feedback as well. But, you know, broadly, the sense I'm getting is there is clearly a momentum largely on back of global risk on. And a lot of sectors have participated, right? Today, the IT index is contributing to the up move. The banks are contributing as well as the PSUs, which have been a big move in the last many weeks. So for IT, though, the feedback is it's a combination of both short covering as well as fresh buying in the IT names. But it's the PSUs which are well bid again. And within PSUs, the sense I'm getting is the power PSUs as well. There is a lot of institutional interest in terms of buying. So that space still looks like, you know, there is a lot of chase happening there. There is a big liquidity event to track because of the few, you know, index changes. So there is a big FTSE rebalancing which is going to happen tomorrow. That itself will lead to almost $500 million of inflows. So again, you know, this rally is largely on global risk on, but looks now the large caps are participating, and there are decent buy flows from larger FIs, especially in the PSU names.
You said FTSE rebalancing will lead to inflows of $500 million. Yesterday, you were telling us a chunk of it goes to HDFC Bank. And what are the other stocks?
Well, I'll talk about not only for FTSE, but for the other indices as well. But in terms of individual names, you know, I've just classified into a few things. So the first one is some large blocks are expected soon. So I'll just read out quickly the few names. The first name is Stelling & Wilson. Expect a large block deal very soon. Remember, the company recently raised money via QIP, and there was a huge demand as well. But I understand there's going to be a promoter stake sale via block deal very soon in Stelling & Wilson. The second is Nippon Life AMC. Even they're expecting a large block deal very soon. A strategic investor is looking to sell a large stake in Nippon AMC. And the third one is Eureka Forbes. Even in Eureka Forbes, there is a buzz that you'll see a large block very soon. The strategic PE investor is looking to sell 10% stake in the company. Interestingly, for Eureka Forbes, there were a couple of initiating coverages as well in the recent past. Today, there was a note from Kotak initiating a buy with a target price of 650 there. The second name is Onward Technologies. That's been buzzing on huge volumes after a large block. The stock is almost locked at 20% upper circuit. I understand a leading AIF was a buyer in today's block deal, so watch out for disclosures there. The third name is Strides Pharma. For the last few days, some bit of traction seems to be back. The volumes are on the higher side. I understand a leading HNI investor is an active buyer in Strides Pharma, and hence a big up move there of late. And the last name is DLF. The entire real estate pack is buzzing, but DLF stands out largely on back of very strong buy flows. Expect high delivery volumes in DLF today. and looks like some bit of institutional interest is back in DLF in the last many days.
Okay, thanks a lot for that. By the way, big up move in the mid-cap IT space as well today. Emphasis, Cyient, Persistent Systems. Something like Sonata Software is at a fresh 52-week high, up 7%. And Birlasoft, that one is at a fresh 52-week high as well. If you remember, Birlasoft reported a very strong quarter. It was a beat on their quarterly performance gone by. Since then, the stock has been building on to its gains, up 134% this year now. Let's do one thing. Let's take a short break. We have about 15 minutes left. So when we come back, we'll get you some buy today, sell tomorrow calls from our technical experts. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
All right, welcome back. Well, we're just counting down to what has been a terrific Thursday for the market. The Nifty and the sensex holding on to their gains from the day. And as we wind down, we're going to talk about some interesting, observations. Nimesh is with us. He's going to give us an insight on the 3 big passive index events tomorrow. Nimesh, what are you tracking?
That's right, Sonia. So as you rightly pointed out, there are 3 major, passive index events to track. The first one is FTSE. We spoke about how the FTSE rebalancing is going to lead to an inflow of $500 million into India. Of course, the big chunk of that will go to HDFC Bank, which is close to 450 million. But apart from that, the one stock to track in that FTSE rebalancing would be Mankind Pharma. That's getting added to the FTSE All World as well as the All Indices index, and that will lead to an inflow of close to $30 million in that particular stock, according to the IFL alternative note. So that's one stock to track with the FTSE rebalancing apart from HDFC Bank. The second is the BSE 100 index. There is going to be big changes in the components of those indices. So in terms of additions to that index, stocks like TVS Motors, Hindustan Aeronautics, Power Grid, that's getting added. Yes Bank is getting added, APL Apollo, Persistent and IDFC Bank. So these are the few stocks which are getting added to the BSE 100. There are stocks which are getting deleted from that index, which includes the likes of Tata Elxsi, Voltas, Adani Power, Bandhan Bank, Emphasis, Crompton Consumer, as well as ACC. So they're getting deleted from the BSE 100. The third passive index to track would be the Dow Jones Sustainability Index, both at the EM level as well as the world indices level. Now, globally, the ESG funds, the tracking could be close to $55 billion. And for India, the money which tracks is between $3 to $5 billion. In terms of the Sustainability EM Index, there are a few additions, which includes the likes of Embassy REITs, JSW Steel, Godrej Properties as well, which is getting added to that index, as well as UPL. And in the Dow Jones Sustainability World Index, there are 3 additions, which is JSW Steel, UPL, and Dr. Reddy's. So these are the names which are getting added. So broadly, there are 3 big events, liquidity events to track. But as I said earlier as well, from a FTSE point of view, watch out for HDFC Bank and Mankind Pharma.
Okay, thank you very much for that. Mitesh is back with us. The Nifty is just a shade below 21,200, going strong with the 250-point rally. Mitesh, what would your BTST calls be?
So I'll go with the BTST on Bajaj Finserv. I think, that's something which is breaking out. Keep a stop at 1720. Look for targets of 1755 here. And the other one which I like is AU Finance, AU Bank. That's a BTST with a stop at about 752 and a target of 775.
Okay, that's AU Small Finance Bank, right? Target of 775 there. Got it. There's still upside, you're saying, despite the rally that we've already seen. Any thoughts in the real estate space? Any other stock? I mean, I'm trying to check from a positional trade point of view, not just from an intraday trade. Any stocks that you can still buy into?
On the stock side, I think, I like a lot of realty stocks. In fact, DLF has been the leader, but when you want to buy, you will want to look at the risk-reward equation. So while there is more upside left, I think buy it on consolidation, buy it on bad days. The other one which I like is Oberoi Realty. Again, the problem is the same. The kind of runoff which these stocks have seen, which means that I'm not taking any fresh long exposure over here. But around, let's say, levels of 1460, 1462, I think if I can get an entry to Oberoi Realty, I think that's the one which I would want to buy immediately.
Okay, let's do one thing. Let's take a commercial break. But before we do that, let's also listen in to some views that came in from Ramdev Agarwal on the markets, on the way forward, whether this uptrend could continue. Listen in and we'll come back.
Significant reduction in the interest rates would warrant, re-rating in terms of higher P multiples for the stocks, which is a logical other thing. But if it is, cyclical upturn, downturn from, say, 1.5% to 4%, 4% again comes. So this is a cycle. I think stock markets, they are already priced in this kind of movements. India has, despite all the difficulties world over, we have brilliant time. Goldilocks is on in India even earlier than US.
The god seems to be Indian. We were worried about US interest rate rising. Santa Powell comes out. We were worried about oil going to triple digit thanks to geopolitical tension. God plays his role, and tathastu, oil is down to 75. We were worried about monsoon, and while the August rains were bad, September recovery happened. We were worried about central election, and the state election results give an indication. So now you have to believe that God is an Indian, stay invested in the market, enjoy the ride.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, keep an eye out on Apollo Tyres. Nimesh had hinted, a couple of days back on D Street Chatter, there's a possibility there could be a large trade out there. I think the street is sensing that that's likely to take place, and that's why we're seeing that stock from being up close to around 4%. Now it's moving low and it's falling on very, very large volumes. I think that's a bit of an overhang on the stock. So let's see whether or not that plays out. But Nimesh had given us that heads up, explains why the stock is a little bit lower. Mitesh is still with us. Mitesh, final call before we let you go. Apollo Tyres, the stock was doing very, very well. There is that overhang that's there. But on the charts, how's it looking?
Yeah, I think the overall trend was on the upside today. I think, this last 1 hour selling has changed the candlestick pattern. I think the stock might need to consolidate before it continues, and the levels where I think it would find support should be closer to about 430, 432. So around those levels, I think this decline should get arrested.
Okay, by the way, we just have a couple of minutes before we end for the day, and it's going to end on a very, very strong note. So there's no two ways about that. If you look at the biggest gainers today, it's been the technology names. So Mitesh, before we wind down for the day, just wanted your thoughts on some of the technology names. Infosys, Tech Mahindra, Wipro have all seen 4% gains. Would you recommend, taking fresh positions in the next couple of days? Do you see these stocks building on to their gains?
I do. So in fact, with a disclaimer that we have Tech Mahindra as a recommendation to our clients, there is vested interest. And Wipro was a call at the beginning of the day. I think all these stocks are now showing good signs of sustained up move. It may not be a very strong momentum because these will not move 8-9% in a day. But broadly, look at the large cap stocks as well as a couple of mid cap names like Coforge, LTIM, etc. I think the patterns are positively biased. So I think next few days, IT stocks should contribute heavily to the index gains.
Okay, looks like the sensex is trying to finish with a 1,000-point rally. It's 997, 993 in terms of gains for the sensex. Intraday, it did go up to a 1,000-point rally, but we are finishing at the day's high. We had a strong gap up opening courtesy a dovish Fed. The Nifty opened with gains of 180 points, and it's added on another 100 points as the day has progressed. No signs of profit booking at any point of time. 1.4% gain on the benchmark indices. Mid-caps moving in step. The mid-cap index up 600 points. Very solid advanced decline ratio, firmly skewed in favor of the gaining side. And the two big pillars for the market up move, one is banks. The Nifty banking index up close to about 1.4% with names like IndusInd Bank rallying 3%. ICICI Bank going on to hit fresh record high levels with a 2% gain. Kotak Mahindra Bank also participating on the way up, and IT. Leadership coming through from IT. The top 5 Nifty gainers today are IT names. Led by Infosys, up 4%, LTI Mindtree giving it company with a similar up move. Few losers, Power Grid is under pressure. There was a UBS sell call today, kept the target price at 205, put the stock lower. Cipla, HDFC Life too, ending in the red.
Okay, well, in the broader markets, I mean, it's been a really strong session, right? No complaints at all. 600 points higher for the mid-cap index. Advanced decline ratio very strong at 1,600 stocks on the advancing side. And it's all your PSU stocks which have done really well today. So whether it's Hoodco, something like an IRFC, SAIL, IRCON, IRDA, EIL, all these stocks up anywhere between 6 to 12%. Huge volumes as well on these names. Even the laggards have started to come back. So something like a Vodafone Idea up about 5%. Today, the day also belonged to the platform companies. So you had Nykaa, which did well. Zomato was up 3.5%. A couple of the other names also picked up pace. NTPC, PFC, etc. also ended in the green. But on the red side, you had in the broader market some of the power stocks, some of the infrastructure names. So something like an HCC was down 2%, REC, Bank of India, but few and far between really. Today was a day about all the gainers, and it was a terrific, terrific day for the market. I think the good part is that we ended at the high point. We didn't give up on any of our gains. We didn't see any volatility. And maybe this is an indication that, we could build on to our gains in the next couple of days.
Well, even if you're a pessimist, it'll be hard to find any kind of negative faults in today's trading session, because it was absolutely splendid. The pillars of the market did well. The breadth of the market was good. And the bulls, they've had a terrific Thursday. So let's see how the next few trading sessions go. But for the time being, we'll slip into a short break. On the other side, you don't go anywhere, because Markets Forward is lined up for you.
CNBC-TV18, embarking on a quarter century of excellence.